During a 3-month period, the Nigerian Exchange Limited, or NGX, was one of the best performing exchanges in Africa. Despite fears about increasing inflation, interest rate hikes, and dismal macroeconomic indices, investors have remained confident in Nigeria's stock market. Now, according to African Markets, a website that tracks the performance of African exchanges, the Ghana Stock Exchange came in first, while the NGX was second, and followed by the Malawi Stock Exchange as well. Those are the top 3 here on the continent. Joining me for this conversation here in Lagos, Nigeria, I have Aziz Lawal. He's the Managing Director, Trust Bank Financial Group. Aziz, welcome again to Business Edge. Thank you so much for joining me.
Yeah, good morning. I'm very happy to be here. Thank you.
Great. So we've been seeing some interesting things happen with the Nigerian Exchange. There was a record breaker last week, and many people are even anticipating more records. But we reported a 15-year high on the back of strong positive sentiment as market capitalization listed value of equities, which opened the trading month of August at 35.011 trillion naira, closed at 36.422 trillion naira. What's leading to the good results and definitely the upward movement of the exchange?
Yeah, thank you. Yeah, what we saw in August compared to what we saw before then, specifically between May 2029 and 31st July, where the market was largely driven by policies. But specifically for August, more strategic alignment and anticipation of positive results from strong banks. Particularly for August, consumer goods dominated. That indices alone gained about 25%, largely driven by gains in Dangote flour, Dangote sugar, Boa Foods, Natcon, and the likes. I mean, in context, Dangote sugar did over 100% in August. Boa Foods did over 30%, and Natcon did over 50%. So specifically, consumer goods sector and anticipation of strong earnings by banks drove the performance that we saw in August.
But it's interesting we talk about the consumer goods sector because we know just going into August, they also took a big hit. We understand how inflation is affecting the Nigerian pockets as well. So when you look at the consumer goods market being the one responsible for driving this record breaker last week, some people would say, make it make sense. How does that balance given what we know about what's currently happening at the real economic level for many Nigerians?
Yeah, thank you. Consumer goods is consumer goods, right? So regardless of the economic situation, people will still eat, right? We all eat to survive. It's not luxury. These are not luxury goods. In fact, they grew their performances significantly because quite a number of them also increased prices, right? So regardless of the economic situation, there are still some strong consumer goods stickers that are going to record good numbers, particularly because of their dominance in the industry, right? And when you're talking about foods generally, you're talking about flour mills, you're talking about Boa Foods, you're talking about Dangote sugar. These companies, regardless of the economic situation, they most likely will remain dominant, which is what we've seen.
As we look at the fact that Nigeria's Bourse, NGX, was the second best performer on the continent. So Aziz, I need to ask, we've talked about, of course, how those in the consumables markets have been able to continue to make more money or profits, let's just call it what it is, when we've seen how inflation and how a weak naira has hit the pockets of the average Nigerian. But let's also look at who's dominating the local market. So who dominates this market? Who's really pushing it? Are we seeing this dominance from the local players or is it foreign players? Because there's been concern about the fact that foreign direct investment has not been coming in and foreign players have really backed away from the NGX because of uncertainty before President Tinubu came into office.
Yeah, thank you. The dominance of the market currently is in the hands of the local investors, and I mean by the month that dominance seems to be increasing, and it's not like even after the reforms that you mentioned, right? It's not been enough to lure foreign investors into the country. Liberalization of the exchange and attempts to unify those two windows. I mean, it's a good place to start, but the biggest worry, which is I come in as a foreign investors, for example, I come in $1 million, I buy shares, and in 2 months I sell those shares, and I want to go back home with my $2 million, for example, is the liquidity available for me to repatriate my capital and my gains? And that's still a big question mark, because and if that is not resolved, local investors will continue to drive the market. So like I said, the reform is a good step in the right direction, but it has not addressed the complete worry of foreign investors, which is at any point you want to exit any market, there should be funds available for you to exit conveniently. And that's still an issue presently. So the locals are currently dominating the market.
Okay, let's quickly look at a trend or two we see with the market. And the bullish trend can be attributed, some have said, to investors jostling for low, medium, and high capitalized stocks across some major sectors amid, as we talked about, these favorable policies that the market seems to be responding to from President Tinubu. Which one of these do you think is sustainable? What's not? What's really, what do we see as the medium and long-term sort of trend that we expect to drive the NGX in the coming months to the end of the year?
That's like a 3 or 4 in one question, right? So on sustainability, right? Typically, when locals drive the markets, when they dominate the market, whatever the performance is, particularly if it is positive, the chances of sustainability is higher when locals drive the market. That's number one. And then number two, we're talking about a lot of the rally that we have seen in the market since the new administration have been driven by policies and anticipation of improved policies. If, for example, removal of subsidy is sustainable, it doesn't look like the government of the day is going to reverse the removal any moment. That's number one. The unification of the liberalization of the exchange rate is sustainable. Again, considering the tight liquidity levels when it has to do with reserves and making dollars available for businesses, that is still an issue. So the government is not going to go back on that. So if we are looking at it from who dominates the market, is the gains, the performance that we are seeing presently, the positive performance is sustainable. Looking at it from the angle of the policies driving the market or further fueling the growth that we are seeing in the market, are they sustainable? They are sustainable because there's policies that, we are at that corner of the world where we cannot turn back, right? So it's actually the performance that we are seeing presently is sustainable, and we expect that the performance may moderate, not this one that is jumping month on month, right? It may moderate to marginal gains, because last month we did over 3.4%. Since the turn of this administration, the market has done over 27%. Before they came in, it was like 3%. So about 5 months into the year, it was 3%. Now 3 months after the administration is done about 27%. If the pace may not be sustainable, but the positive sentiment will be sustainable.
Okay, that makes sense. And pace is really what a lot of people are interestingly focused on. But Aziz, I need to ask, we talk a lot about foreign direct investments, FDI, as it concerns the Nigerian Stock Exchange. We know that the president today is off to India with a cohort of ministers to go and look for investments and also have conversations about the G20 bloc membership. But before getting into that, do you see us getting an increase in FDI before the end of the year, making some progress, appreciable progress, based on the back of some of the reforms and the movements, or at least the actions we're seeing from the Tinubu administration?
Getting more FDIs before the end of the year is a possibility, but that possibility will be driven largely by the size of the country's reserves. Right, it's currently at $33.65 billion, and this reported number is highly debated. Right. Some are saying it's $18 billion. Some are saying it's $20 billion. Even JP Morgan went as low as saying that it's around 3-point-something billion dollars, right? But if we're going to take the data that we have presently, if the administration can grow the reserve to their target of $40 billion before the end of the year, it will send a very strong signal to foreign investors, because really, before foreign investors start looking at you, they will look at the side of your reserves. And like I mentioned earlier, I come in with $1 million. How am I sure that at any point I want to repatriate my funds, there's $1 million available to me to repatriate my capital and possibly gain as well? What will provide comfort to investors in that regard is foreign reserves. So the size of your foreign reserves will send a very strong signal to foreign investors. So based on the current reforms and based on the moves that we are seeing the current administration doing, like it was reported, just today, that where an NPC said that daily production has now improved to 1.67. That's significant. From meager 1.3, at some point we're doing less than 1 million barrels per day. So those kind of indicators send signals that foreign reserves will improve. If that improves and possibly hits the target of $40 billion before the end of the year, we can be expecting foreign direct investments then. Thank you.
All right. Aziz, before I let you go, let's quickly touch on President Tinubu's trip. He has gone to India for the G20 summit, reportedly on the invitation of India's Prime Minister specifically. What areas would you expect his team to pitch as low-hanging fruits and even long-term appreciable projects that we expect to see? We know he went with at least 3 or 4 ministers and even businessmen here in Nigeria to go on this excursion. But Nigerians will expect that this excursion comes back with payments, with gain, with profits. And then there's also the G20 membership conversation to be had when we look at the president's trip. How can that also impact Nigeria's economy if we end up becoming a member of the G20? It's not a snap your fingers and happen. It could still take several months and, in fact, several years. But let's look at the long game here that we're playing.
Yeah, to start with, that's a very bold move by the administration. If I take the first question, what they should look at, I think the second question we address that. If they can just jump on that membership, like you rightly noted, right, that it may take several months or years, but the fact is that they are making that attempt, and if there's a positive signal where, like, there are indications that they will be accepted into the bloc, the positive sentiment will begin to radiate globally and push for foreign investors into Nigeria. So the importance is that, G20 is a bloc of the most industrialized nations in the world, right? So if you can plug into that and join that membership, what it means is that you will get foreign direct investments. You become a benchmark. You be in that basket where foreign investors are looking at. And interestingly, this is also what this administration is looking at. Instead of going to borrow more debt, why not find a way to join this bloc such that foreign direct investments will flow in naturally, as against the debt we are looking at to revive the economy. So the move is very bold. If there are any positive signals or indications that we may be accepted, already that will start boosting the confidence of investors. And on a strategic level, looking at it as an option to bring in foreign direct investment or bring in dollar flows or other foreign currencies compared to going to the market to borrow. That's a very, very, very strategic move by the current administration.
All right, Aziz, I lied. I have one quick question, 30 seconds for an answer. The market has opened today. Last week, we broke records. We are seemingly on this trend. What's it looking like for today? Just very quickly as we wrap up.
Yes, we expect that the market will trade positively today on the back of the impressive results we saw on Friday, particularly for the banks. So Fidelity Bank and GTB Bank, they released impressive results. We expect that other banks will take a cue from that today, and other sectors. So we expect a robust positive performance today. Thank you.
All right. Thank you so much, Aziz Lawal, Managing Director, Trust Bank Financial Group. Thank you for joining me on Business Edge.
Yeah, thank you so much for having me. Thank you.
All right, fantastic.